Good morning. Welcome to the mortgage rate forecast, your residential mortgage rates and news. It's March 8th. Let's get to going on some charts. What do we got here? Well, we have a gap opening from where we closed yesterday. So we're opening higher, trading pretty well today. Currently, we're at $102.22 this morning. The resistance level is right above us at about $102.25, as we can see here. And we have support level coming in at about a 101.60. Now this is kind of interesting. You see this downward trading channel that we began to run. So we're at 101.60, and I've been mentioning this for quite some time, this support level that we could fall to. So it's kind of neat to see that that is actually today our new support. So here's what we got. We do have a developing support line of continuing at about $102 even. Right here you can see on this yellow line. So reports are pretty good today. This is why we had a nice gap in the opening. Treasury 3-year auction helped us quite a bit. There's still a little bit of trouble in the other markets. The Japanese bonds actually are doing a little bit better. I mentioned on my earlier reports they actually had a negative yield, so investors putting their money into Japanese bonds were losing money with that investment, which is obviously a very poor investment. So Japanese bonds are actually doing a little bit better today, and Japan has really been driving our market. We're also seeing Chinese exports are a little bit worse, so that's helping our overall bond market as well. So you could probably see this morning stocks are down a little bit, and of course bonds are doing pretty well. We have developed, though, since my last report, a downward trading channel. So hopefully we can maintain this line and perhaps trade above this resistance level here over the next few days. So to quantify, if you were getting a mortgage on this day, which I actually had a client lock in at the perfect timing, hardly ever happens, but if you were getting a mortgage on this day versus this day, today, you would be paying about 1 point worse. So for any specific rate, generally any specific rate of about 1 point worse. So if you're getting interest rate and back here you were paying a point to get that great rate that you really wanted, today you would have to pay 2 points. So anyway, that's what's going on with the market on the charts. Here's what the analysts are saying. Neil moves to a neutral position on the short term, and he also is maintaining his neutral position on long term. So 1 to 2 days out, he's thinking bonds are going to trade pretty flat. So that $102 resistance support, I should say, actually could be maintained. Dan is changing to more of a bearish on the long term, but staying neutral on short. So we do have some consistency that short term bonds are going to trade flat for a while. So that's your news for the day. If you have any questions or would like more information, my information is at the top. If it's your first time on the page, would love for you to subscribe, keep you posted on what's going on with the market, what interest rates are doing, and if none of this makes sense to you, it's okay. It's okay. You can click this link at your top right, and this will take you to Mortgage Bonds 101 and give you a quick tutorial on how bonds impact you as the consumer getting a mortgage. Before you go, please like the page. Everybody likes to be liked, so does this page, so does this video, so please hit like. Would love that, and would love to hear from you. Please feel free to leave your comments below. Take care, guys. Have a great week. Bye-bye.